In today's video, we will do the top 30 quotes from one of the best mutual fund managers of our time, the late Mr. John Neff. If we miss any quote you like, we do apologize, and please share it with us in the comment below. Thank you. We will take a quick moment to introduce Mr. John Neff. He was born in 1931 in Wauseon, Ohio, graduating from business school in 1958. In 1964 he joined the Wellington Manager Company, and after a few years, he was appointed as portfolio manager of the Windsor, Gemini, and qualified dividend funds. During his 31 years at Windsor, the fund returned annually of 13.7% versus the 10.6% for the S&P 500. According to the John P. Reese article at SeekingAlpha.com, if we invested $10,000 in John Neff's fund through his reigns, the $10,000 would turn more than $564,000. With the same $10,000 if we invested in the S&P 500, we would only get about $233,000. The return is more than double than the S&P 500. In short, Mr. John Neff was able to beat the market during his investment career, and we can learn a lot from his investment quotes. With all due respect and no further delay, let us dive in. 1. Obsession with broad diversification is the sure road to mediocrity. 2. With patience, luck, and sound judgment, you keep moving forward. That's the nature of the investment game. 3. Investment success does not require glamour stocks or bull markets. For if you buy stocks when they are out of favor and unloved, and sell them into strength when other investors recognize their merits, you'll often go home with handsome gains. 5. Conventional wisdom and preconceived notions are stumbling blocks, as well as signs of opportunity. 6. Never say never in the wonderful world of stock market fluctuations. 7. We were determined, as always, to keep our heads while others seemed intent on losing theirs. 8. An early Greek philosopher, Heraclitus, observed that a person cannot step twice in the same river, because the river changes constantly. Nor, in the same sense, can an investor step twice in the same market, because the market changes constantly. 9. My kind of investing rests on 3 elements: character, goals, and experience. 10. The market's personality. It is irrational and unsentimental. It is cantankerous and hostile. At times, it is forgiving and congenial.
Before we move to quote 11, please, if you like what you see so far, may you kindly click like and subscribe. This will really help us a lot, and we owe it all to you. Thank you.
11. To us, ugly stocks were often beautiful. 12. Despite their solid earnings, they are rejected and ignored by investors caught in the clutch of groupthink. 13. Long-term investment strategies need not rest on a few very risky glamour stocks. 14. Don't make fundamental mistakes. 15. There is a thin line between being a contrarian and being just plain stubborn. 16. Most people who own more than 2 mutual funds are over-diversified. 17. My whole career, I have argued with the stock market. 18. The market has good days and bad days, good years and bad years. You can't predict them, and they can reverse course with stunning speed. But you can learn to cope with them and improve your odds. 19. All earnings are not equal. 20. Our strength always depended on coaxing overlooked, out-of-favor stocks to move up from undervalued to fairly valued. We aimed for easier and less risky appreciation, and left greater fool investing to others. Just a quick friendly reminder from payingforward.net: if you do well in life, or when you do well in life, seek ways to pay it forward to others that are less fortunate than us. Thank you. 21. You don't need stunning growth rates. 22. An increase in the PE ratio, coupled with improved earnings, turbocharges the appreciation potential. 23. Keep tabs on stock prices posting new lows. 24. Low stock prices should never trigger automatic buy signals. But in the course of my career, few days have passed when the new low list has not included 1 or 2 solid companies worth investigating. 25. No prudent investor puts all the eggs in a single basket. But too much diversification hobbles performance. 26. Where there is panic, there is also opportunity. 27. My odds improve, thanks to proliferating numbers of traders motivated by tips and superficial knowledge. 28. Seizing an opportunity created by hasty investors driven by crowd psychology instead of sound analysis. 29. I attribute success not to genius or blinding insights, but to a frugal nature and lessons well learned. 30. In the bargain, you can make good money. If you would like to see a bargain on your stock of interest, please feel free to visit our site at valuesnip.com for free intrinsic value calculators. Thank you for making it this far. We throw in 3 important bonus quote here just for you. 31. Everyone wants to own highly recognized growth stocks. They're ordinarily quite safe, and they seldom embarrass shareholders. That's not a very good case for buying them. 32. I wouldn't want to get caught in a rush for the exit, much less get left behind. 33. Yield is return that shareholders can pocket. Thank you so much for your time and attention. We greatly appreciated it.